swing trading. Now, when it comes to swing trading, most traders prefer to swing trade because what they're doing on the lower time frame day trading is not working. Usually, this is what they would say.
No, I don't prefer the lower time frame because the lower time frame has a lot of noise and it just feels that things are just happening at random. I prefer going to the higher time frame because things are slower and I can see things more clearly.
Now, that thought process might have some truth in it, but here's the thing. If the strategy you're using on the lower time frame does not work and you're just gambling, if you take that same strategy and take it to the higher time frame, you're pretty much just gambling in
slow motion.
And that's not what you want to do, right? The last thing you want to do in the markets is just spending days and weeks, sometimes even months, holding on to a position where it just leads to nowhere. And the next thing you're questioning is, should I just open a food truck instead? But no, okay? No one's gonna be opening any food truck, not today, especially not after this video. In this video, I'm gonna be covering the best swing strategy approach that you can use by just following these 5 steps. The first one being understanding the trend, the support and resistance, the lower time frame, the pullback, and then the reversal. By just following these 5 techniques, which I'm gonna be showing you shortly, you will be able to swing trade successfully and not worrying about opening any food truck. So before we get started, make sure to hit the like button, subscribe if you haven't already. I know a lot of you guys who are watching this video who's not subscribing. So please do make sure to subscribe. It's gonna help the channel a lot. And let's get right into it. When it comes to swing trading, oftentimes traders are comparing it with day trading. And what's the main thing that's difference between swing trading and day trading? So if we look at Bitcoin here, I'm looking at it on the daily time frame, okay? I'm gonna talk about the entire strategy in a bit. The main thing that I really want you to look at here is we do have an uptrend coming in. We have some sort of pullback, and let's say we wanna be getting in at this price point right here, right at the 20th of April on a beautiful Sunday. So if let's say we go for a buy here, and again, I'm gonna talk about a strategy very soon. Let's hypothetically say we're gonna get out at the recent high here. And let's see how long this trade will take to reach the recent high. We have a move up very quickly. We have a little bit of a pullback and still holding grounds there, and we reach profit. Okay, we reached profit target in more or less 1 month exactly, right? We got in at around 20th of April and the exit was at around 21st of May. Okay, so this right here would be a typical swing strategy approach, a swing strategy entry. However, there is still some ways to finesse the entry to get tighter stops and to hold on to the trade longer, which I'm going to talk about later on. But the main thing here to show you is how long this trade actually took, which is around 1 month. Now, using the same idea here, if you're day trading, it would be on a completely different time frame. On this time here, we were looking at a daily time frame. If we jump onto this right here, we are on Bitcoin, but now we are on the 5-minute time frame, okay? More or less the same look that you have here. We have a move up, right? We have a pullback coming in, and right here would potentially be an entry. So again, hypothetically, let's say this would be the entry, stops would be here, going to the recent high. I just want to show you with the same setup, how long would a trade reach profit for a higher time frame swing trade with against a lower time frame day trade. So right here, let's say we got in at 5:15. Let's play this forward, move up very quickly, and there we go, we reached target. Okay, we reached target in less than 30 minutes. We got in at 5:15, we got out at 5:45. That's exactly 30 minutes. Okay, so that's the main core difference between swing trading and day trading. How long you are in a trade. You know, the main thing that I can really say about that is going to be the time frame. Aside from the time frame itself, most of the time the strategy can be applied to both day trading and swing trading. It just all comes down to your personal preference. And because you clicked on this video, I would assume that you prefer swing trading a little bit more, or at least you're wondering why is swing trading better. Now, personally for me, I prefer swing trading because swing trading gives you a lot more time. Why is that the case? When it comes to day trading, you need to be in front of the charts almost all the time when the market is open. And you need to be super proficient at spotting trade setups because Day trading requires you to stay really focused. And sometimes traders will get burnt out from being too focused in the markets for too long of a time. But when it comes to day trading, you really need to understand that you need time to really focus on the charts for at least a couple hours to a few hours a day. You need to stay hyper focused in the markets when you're day trading. And sometimes that's not always going to be the case for a lot of traders because they have a full-time job they're working at. And when they come back from work looking at the charts, they might not have the focus. And then the third and final thing is, most people think the harder you work in the market, the better result you're gonna get. And with that thought process, if they go into the markets and just getting in and out quick, in and out quick, in and out quick, very much so like my sex life.
What?
That's not going to help with the bottom line because you're making very small profits while spending a lot of time. So that's the last thing you wanna do. However, when it comes to swing trading, it frees up a lot of your time while still being able to make huge profits. You're able to stay in the markets much longer and not needing to stare at the screen every single minute of the day. That gives you time to spend with your kids, go on your Tinder date, and not be that friend that cancels on your Friday plans. But the most important thing is, with the skills from swing trading, you are also able to apply it for your investments. Because when it comes to investment, you're gonna be holding it for a very long period, right? So that's what swing trading, the skill of swing trading is going to give you. So hopefully that gives you a little bit of a perspective of what day trading is and what swing trading is. Personally, for me, I prefer swing trading a lot more because of all the reasons I've just highlighted. But the strategy I'm about to show you here can be applied to both day trading as well as swing trading. It all just comes down to how you're gonna be managing the trade. So without further ado, I'm gonna talk about the 5 main things. So let's hop right back into the charts. All right, so we're looking at Euro USD here and we are looking at it on a daily time frame. Again, if you're a swing trader, the best time frame to be on will probably be the daily time frame. If you go any lower, then it's almost like you're day trading. You can even go up to the weekly time frame, but let's stay here on the daily time frame. Now, first step is identifying a trend. On the daily time frame, keep it simple. Do we have higher highs and higher lows in the market? Or if you're looking for a downtrend, lower lows and lower highs. Now, clearly, as we are looking at this from the bottom, we are able to see the move up, move back down, move up, move back down. Higher highs and higher lows are consistently forming in the market. So right off the bat, first thing on the list, check, we have a trend. Okay. Second thing, super easy, look for a support or resistance level. If we just zoom out a little bit and connect the dots here, here, and here, these 3 points would give you a strong support zone. Let's just pull out the zone right here. And that becomes the area we will be looking at as price comes down, where we're gonna be picking up the longs. Okay, so just like that, within 1 minute, 2 items on the list, check. Third thing, we would drop down to the lower time frame. The whole reason why we're going down to the lower time frame is to finesse our entry so that we do not need to get in with a wide stop loss. So from the daily time frame, you just need to go down 1 time frame lower. Just like that, and then we are going to move on to the 4th step, which is reading the pullback. Okay, now when it comes to reading a pullback, it's actually super simple. We at Urban Forex actually specializes in this technique. This technique is called fading the momentum. Now, let's assume that we have a move up. I'm gonna start off with this whiteboard here so that we can at least understand the logic behind it before looking at the live charts. So we are in an uptrend and we wanna fade a pullback. In this case, if we're in an uptrend, a pullback would be for the sell side. So let's say we have a move down, a pullback, a move down lower, and a move down lower. Your goal here when it comes to reading a pullback is making sure that each move to the downside gets smaller and smaller, signifying that the opposite party, in this case, the sellers, are getting weaker. Because all you want to do is making sure that the seller dies and then the buyers return for you to get back in, right? And you might be wondering, what's the point of waiting for the sellers to die? I might as well just buy when I see a strong trending market. And that's the thing about swing trading or trading in general, right? If you do see a move going up strong like this, If you buy right here, if you buy there, if you buy there, you're getting in at a price point where things could very easily turn around. And if it does turn around, you're in drawdown. You could be stopped out of the market. Getting in as the market is becoming strong or weak is very, very simple. But holding through it, when price comes all the way back down to your entry and then going lower, that's not a situation you want to be in, right? So this is the whole reason why we're waiting for a pullback into a support and resistance area to look for the turnaround, to look for the reversal, right? So hopefully that's clear. Now, we went off on a tangent a little bit, but the main thing here I want to point out is focus on this move coming down, then focus on this move, and then focus on this move. All the green lines that I have just drew here, they all look more or less the same size. That tells you the sellers are still strong. There's two things you want to do here. Number one, either make sure the sell side becomes weaker, which means every move down becomes smaller, or making sure that the buy side becomes stronger. So in this case, the buy side would be this move up. Is this stronger? No. Is this stronger compared to this? No. But here, at this support and resistance area, if it becomes stronger than the preceding move right here, that tells you your buyers are gaining strength, right? And if your buyers are gaining strength at a good level, that tells you your buyers are back in action, right? So once you see this move happening, something like this, okay, the only thing you need to see is what the sellers are going to do next. If the next move coming down does not make a lower low, this right here might just be the area that tells you the first higher low has formed, this downtrend forming a pullback is broken, and the trend might be shifting back up into an uptrend. This right here is what we actually call a V formation with a pullback test. We actually have a whole video about this, just check it out right here. Okay, so remember the whole goal of reading a pullback. We want to make sure either the sellers right here are weakening, or we want to make sure the buyers right here is gaining strength, like this, okay? All of that needs to happen at a higher time frame level. So with that said, let's jump back onto Euro USD and let's look at each swing coming down. From the absolute top here, we have a move coming down like this, okay? The next swing that we have is here. If we compare those two swings, we see that the second swing down is much smaller. Now, just because it's smaller, it doesn't mean we need to get in, because remember what we drew in the first place. We made sure that we marked out our SNR zone and we would only want to take action there. Okay, I'll tell you why later. Coming back to this, the next move down is right here. It doesn't feel like the sellers are gaining strength, but it doesn't feel like it's weakening as well. And one more move towards the downside right here almost feels like the sellers are coming back to life, okay? If we look at the buyers, all this while, it's not strong whatsoever compared to the sell side. It's not getting stronger compared to this swing. It's not strong here, but here it suddenly came back up very, very hard. And where is this buyers coming from? It's reacting from this higher time frame level. Because it's a higher time frame level, this buyer right here would most likely be your bigger player buyer. When I say bigger player, it might mean hedge funds, banks, institutions. That's where the big cash is being pumped into the market, right? So again, what's the next thing that we need to do? We need to make sure that the next move from the sell side does not make a lower low. Instead, it holds and make a higher low. If I play this forward, we can see that the sellers tried to make another low and then got rejected back up. So again, like what we were drawing earlier, this downtrend from making lower lows and lower highs stopped right here and started to make its first higher low. All of this happening at a higher time frame level. So this is the perfect area to get in for your swing trade. And it's not complicated at all. So now that we have all the checklists done, we have the higher time frame trend, higher time frame level, we drop down to the lower time frame. We looked at the pullback, we watch out for the reversal. Now let's look for our entry. So let's hit the buys right here. with the buy position right there, and let's mark out our profit and loss marker. You'll put your stop loss right below this low here, because if it goes below there, it might mean that the sellers are coming back, and then you would go for your target at the recent high. I'm gonna show you a couple more ways of holding onto your trade, but right now let's just focus on the recent high. Here we're looking at a potential roundabout 3-hour trade. Now, if you're trading at 2% risk per trade, that's equivalent to 6%. Okay, if you tell your banker you're making 6% return on a monthly basis, that's gonna blow their mind. All right, now let's go back to the daily time frame, because we do not need to stay here on the 240 time frame, because we are day trading. That way you can take the rest of the time that you have to spend time with your kids, with your wife, with your girlfriend, with your parents, right? So entry will look like this, and let's play this forward. We started the trade off on the 19th of May. Let's see how long this trade would hold before reaching target. We held for a couple of days, and then there we go. So exit would be on the 12th of June. That's more or less 3 weeks. So not even a month. In just 3 weeks, you're able to make 6% from the market. There is 54 weeks in a year. And if you are able to make 6% every 3 weeks, you are able to make 108% every single year, doubling your capital in a very, very conventional and a relaxed manner, trading the higher time frame. So let's talk about another example right here. I have the Bitcoin chart. Again, I'm looking at it on the daily time frame. And let's go through the list one more time very, very quickly. First things first, do we have a trend? Yes, we do. We have the higher highs and the higher lows sequence coming in. Second thing, do we have a support equals resistance area? Yes, we do, because I see a high here, and high here. So if I just connect these highs, we see a strong SNR on the higher time frame. Okay, once that's done, let's go to the lower time frame and see how the pullback is coming in. I'm gonna drop down to the 240 time frame here, and let's focus on our zone. Okay, now from the top here, we are able to see right here a move coming lower. Very strong sellers weakening a little bit, still weak. So all this time is getting weaker and weaker and weaker. But we do not consider them because they're not coming into our level, right? One final push from the sell side showing a lot of momentum, and very much so like what we were looking at earlier, we got a huge rejection, a huge reaction from the buy side going all the way up. That right there is your signal telling you a reversal has happened and the bigger players are really interested in buying at that price. Now, some of you guys who are a little bit more savvy would be asking me, why am I not considering this right here? Now, the reason I'm not considering that is because we are still very far from the level. I really want to see price coming down into the support and resistance area and test that area. We always want to test and see if our bigger players are around, right? We're sort of, throwing a bait into the ocean and see, are they taking the bait or not, right? So here we can clearly see they took the bait for sure, right? So now that we have all of the things that we need here covered, let's see where the higher low is setting in. The higher low that we see is setting in right there, right? Clear as day. Once you see that, an entry will look something like this. You would be looking to get in right around here. Stop loss right here, right below the higher low. And then this is the part where I was talking about earlier in terms of the exit. If you're a swing trader, you do not need to always exit at the recent high. There is a few things you can consider. If you're thinking in a long-term investing manner, the other option would be to hold on to the trade provided that the trend continues. So we know this trend, it originates on the daily time frame. If I go back to the daily time frame right here, I know that we are in an uptrend. You would still want to be in the trade despite the fact that we have reached recent high. The whole goal here is hold on to a bullish market as long as possible. What that means is, as long as we are still making higher highs and higher lows sequence, you want to continue to be in the trade until things start to turn around like this. Exactly like how and what we were talking about a potential reversal. You want to see each swing from the buy side getting stronger and stronger. At the same time, On the pullback side, you want to make sure the pullback does not get stronger. It needs to be weaker. As soon as you see the buy side becomes weaker, not making any higher highs, that's your warning signal to potentially get out of the way and then look for your next entry. So for something like this on the Bitcoin, you would want to still be in the trade because the trend is still alive, right? So again, there's two ways of managing your exit. The first way, like what we were looking at earlier on Euro USD, you would be getting out at the recent high. The second option would be to hold on to the trade until the trend changes. Okay, so let's have a look at another example we have here on gold. And this time we are starting off our analysis on the weekly time frame, right? Just one time frame higher than what we were looking at. And what we have here on gold is pretty strong, right? In terms of an uptrend, it's very, very strong towards the upside. So checklist number one, done. We know we are in a strong uptrend. The second thing we need to do here is to look for a support equals resistance area. And here I see a small little niche here that could act as a support. And because we are in such a strong trending market, these are areas that you can potentially lean on just because we are, in a very strong trending market. So two things from the checklist done. Right now, let's go down to the lower time frame, and in this case, we're going to be looking at the daily time frame. On the daily time frame, the next thing you want to do is fade the pullback, which means looking for weakness in the pullback. So from the top, what we are able to see is a short little move to the downside. Not a lot of momentum, but the momentum starts picking up right there and then right here. So you are able to see that each step along the way, it just got stronger and stronger and stronger, right? That's not something we want to see. However, we need to see what this level is going to do. If that level holds and display strong buying action, that tells you the buy could still work, right? So let's play this forward and see what the buyers are gonna do. Right here, a full-blown V formation, a full-blown reversal, right? From this downtrend that we have, coming in like this. This move, it's a lot stronger on the buy side, right? If we track the sell side, it looks like this, like this, like this, each time getting stronger and stronger. If we track the buy side, buy started off weak, got a little bit stronger, and here as it touches the support resistance area, it got a lot stronger, right? Equally as strong as the last sell side. Now, if price were able to hold here, that could tell you the higher low has been put in and the trend may resume from there. So let's track forward just a little bit just to see if price are able to hold, because two things may happen at this area. It may continue holding like this, confirming that a higher low has formed to do this, or it could continue going down lower. If you want to really dive into understanding how to read a reversal like this, I suggest checking out the courses at urbanforex.com. Now, let's play this forward and see what do we have here. Okay, we have price holding grounds here. Now this is more than enough information that tells us this right here is a higher low. Now what you can do very quickly, very easily is to put in your buy position right there and mark out your marker like this. Stops do not need to go wide because we know this is very likely the higher low, and your target can be at the recent high as an option, or keep an open target and hold on to the trade until the uptrend turns into a downtrend. All right, so let's jump back to the weekly time frame as we would usually do once we have our entry dialed in. And we will play this forward and let's see how long it would take for price to reach target. All right, we have a little bit of a drawdown, but we're still holding above our entry and things are still looking like it's traveling up. Things are continuing to go here. We're now in 2025. The entry was in November, mid of November. We're coming into March. Uptrend is still continuing the move up. We have no signs that tell us the trend is going to fail yet. Remember, we're getting in and we want to see the trend continue. If the trend fails to make higher highs and turning into a downtrend, that's where we want to get out. Right now, we are very close to the live market coming into July. And right here, this is where we are right now. Now, again, if you are swing trading, this is completely normal, where you are able to hold on to a trade weeks on end just because you are in a very strong bullish market, right? If, let's say, you're still in this trade, you would be running at around 10 Rs. 10 Rs means if you're trading at 2% risk per trade, you're up 20% for this trade alone. And that's just one market. There is 28 Forex pairs, not including Bitcoin, gold, stocks, so on and so forth. So these are the 5 main things that I always use when I'm swing trading. And as you can see earlier, it can also be used for day trading, right? So these are the kind of strategy you want to have in your tool belt. A universal strategy where you can take and use it on the higher time frame as well as the lower time frame. And all of this is covered in the Urban Forex course. If you have made it this far into the video and you like what you have been watching, just think about what our full course at urbanforex.com would offer. Thank you so much for watching this video. It really warms my heart to see the comments that you guys have been putting in. And if you haven't already, make sure to like and subscribe. It really helps support the channel. And I'll see you on the next one. Cheers. Bye for now.